Hello, I'm Mike Gorn and I'm going to present information on Adidas for MA824 Financial Statement Analysis, the fall semester of 2009 at Boston College, Carroll School of Management. The original presentation was delivered to the class by Fen Wei in early December. Fen did the company background research and I did the financial review. I will give a quick top-level business overview, including some of the strengths and weaknesses of the company, but will focus most of my time on the financial review. Adidas was founded in 1924 and is based in Germany. The business is focused on sports apparel and equipment. Probably best known for their shoes, they also have a large presence in the athletic equipment segment, including football, soccer, golf, tennis, and many more. Their brand recognition is a very high level, including the Adidas brand itself, Reebok, and TaylorMade in the golf segment. In 2005, Adidas merged with Reebok to solidify themselves as the number 2 player in the sports and apparel market, close on Nike's heels. Here I will do a high-level SWOT analysis. Some of Adidas' strengths are their brand recognition, the key sponsorships in some of their key business segments, and the quality of their goods, which have earned them a good reputation in this market. Some of the weaknesses are that their business is very much built on discretionary spending items. So as the economy weakens, so does their sales. They're also very subject to fashion. So if any of the items that they sell suddenly fall out of fashion, it could have a large impact on their sales. Some of Adidas' opportunities are establishing themselves in new markets such as China, and that was a big opportunity for them with the Beijing Olympics in 2008. They also are working on increasing their distribution to get into these new markets. Some of the threats Adidas faces are new entrants to the business, notably companies such as Under Armour, which is small but is matching them pretty much product for product and coming into some of their key markets, and the overall global economy. Now I will start to discuss the financial aspects of Adidas. As I mentioned, Adidas is a European company and is not traded on the New York Stock Exchange or the Nasdaq. All financial values are reported in euros, but have been converted to dollars for the purposes of this presentation and to make comparisons more clear. This data is from the Thomson Financial Database and has been converted to US dollars. You can see that the stock price on 11/30/09 was $57.27 and the market cap is almost $12 billion. Adidas' beta is 1.1, a bit higher than Nike, most likely because they are not quite as big and a little bit less stable, but still less than Under Armour, which is a relatively new competitor and is just starting out in the industry and assumes a higher level of risk. This is the time series balance sheet. There are a couple things worth noting here. Their accounts receivables have increased pretty dramatically from year-end 2007 to year-end 2008, as have their inventories. This is likely due to the weakening economy and slowing of sales, and also maybe a bit more reluctance in some of their suppliers to be able to pay their bills on time. It will be interesting to compare the year-end 2009 numbers when they are released soon to see if this trend continues. There was also a sizable increase in the short-term debt in 2008, suggesting that some new financing was undertaken. Now to the income statement. The first thing to point out is the effect of the merger with Reebok in 2005. You can see that in 2006 there is a dramatic increase in the net sales from $7.8 billion to $13.3 billion, and as the merger is fully integrated, a settling at around $15 billion in 2007 and 2008. It is also important to note that even as sales dipped slightly in 2008, the net income increased by about 10%. This is mainly driven by the lower cost of goods sold and a focus on improving the margins. Hopefully for Adidas, the lower cost of goods sold is coming from improved operations, but there is always the risk that quality is being compromised. This would be indeed a big risk for Adidas because they are known as a premier brand and any sacrifice in quality could have negative impacts to their business. Now we'll take a look at the stock price performance and volumes for Adidas over the past 3 years. The chart is normalized to the values on 11/30/2006, and you can see that both Nike and Adidas outperformed the S&P over that period and have now increased in value. They were down about 40% at the beginning of this year, but were able to take advantage of this year's rally and are now up almost 20% from 2003. Finally, we will look at some key industry ratios for the apparel and footwear industry. Margins are probably the most closely looked at, and you can see that Nike outperforms both Adidas and Under Armour with their operating margin of 13%. Inventory is also a key thing to look at, and once again Nike is setting the bar high with a turn rate of 4.5 versus 3.3 for Adidas. If you look at the days of inventory, Nike is carrying only 81 days, whereas Adidas is at 110 and Under Armour is at 136. For companies in this market, it is also sometimes useful to evaluate their available cash. This can be useful in the event that a strategic acquisition needs to be made. Adidas holds nearly $1 billion in cash, a decent amount for a mature company. The ROE and ROA are also reported for comparison companies. Adidas has a higher ROE than the comparables, but a lower ROA, mostly due to their amount of leverage. In conclusion, Adidas is a strong, well-established company that will likely hold the number 2 spot in their industry for the foreseeable future. Given the current state of the economy and the lack of discretionary spending that is going on, I'm hesitant to recommend the stock at this point and am neutral. I think their opportunities for growth will return as the overall market improves, and over the long term the company will be a safe bet.